Good morning. This is Mark Soderberg with ADM Investor Services with your morning ag outlook for Tuesday, June the 4th. A lot of data out after yesterday's close. I don't know that any of it will change the overall bearish climate that we are currently in here in the ag space, particularly for corn and soybeans. Corn right now is down about 2 cents. Wheat prices are down 4 to 6 across all three classes. Bean complex, a little more mixed, down 1 to 2 in the beans, steady higher in the meal, steady lower in the bean oil. Funds were sellers across the ag space yesterday, and particularly in the corn. Open interest in corn did shoot up 24,000 contracts with yesterday's sell-off. Corn used in the production of ethanol in April at 417 million bushels was slightly below expectations, and down 11% from March, however, up less than 1% from April of 23. In the first 8 months of the 23-24 marketing year, corn usage has reached just over 3.6 billion bushels. That's up 6% from a year ago versus USDA forecast of up 5.25%. I don't look for the USDA to change this forecast in next week's WASDE report. Census crush in the month of April at 178 million bushels for beans was at the high end of expectations. However, still down 13% from the previous month and down 5% from April of 23. Year-to-date crush up 4%. That's in line with the USDA forecast. However, to reach the 2.3 billion bushel estimate, crush over the last 4 months of the marketing year will still need to reach nearly 750 million bushels. That's 4% above last year's record pace. I think the USDA crush estimate is a touch too high. I do look for the USDA to cut that about 15 million bushels in next week's report. Oil stocks did dip to 2.311 billion pounds. That's down 2.5% from last month and down 9% from a year ago. However, still slightly above expectations. Planting progress across all the commodities is pretty much in line with expectations and just above their 5-year averages. Corn plantings did reach 91%, starting to wind down. I don't think we're going to see a significant shift in acres at the end of June. 75% of the crop is in good to excellent shape at the high end of expectations, with overall ratings the highest since 2018. Soybean plantings at 78%, emergence at 55%. Look for ratings here to be strong next week in their initial ratings outlook. Winter wheat ratings did improve 1% to 49%, good to excellent. Harvest is just getting underway, reportedly at 6%. To me, ratings right now on winter wheat would suggest an average yield of about 51.4 bushels an acre, slightly above the USDA forecast of 50.7. Spring wheat plantings are winding down at 94%. Initial ratings here also strong at 74%. Just some light to scattered rains across the central Midwest this week, with temperatures a bit cooler than normal. Dry in West Texas and the northern plains. Some moisture in Kansas and Oklahoma, stretching across the Delta region. NOAA models just continue to slow play a quick transition to La Nina pattern this summer, which does reduce the odds of yield damaging heat across the nation's midsection this summer. Hot, dry conditions remain in place in southern Russia, eastern Ukraine, and western Kazakhstan. Ukraine was the lowest offer for Egyptian's tender at just under $272 a metric ton. That for offered up at 60,000 metric tons. No purchase yet announced. Jordan's also seeking 120,000 tons of wheat in a tender that closes today. And India's ag ministry did raise their domestic wheat production forecast by nearly 1 million metric tons to 112.9. So lower to start with, looking for some demand on these lower prices until weather changes. Hard to make a real bullish argument at this point. Thank you very much, and I hope you have a wonderful day.